afternoon, everyone, and welcome to Stock Market Today. It is Wednesday, March 18th. It's Alyssa Quorum here. I'm joined by Ed Carson. And on today's show, we're going to be taking a look at Citrix Systems as well as Apple and Tesla. But first, we begin with a look at the major indexes. So this is a weekly chart of the S&P 500. So as you can see, hitting its lowest levels in several years at this point now. We did close across the board well off of the lows, but still with substantial losses. Ed, I feel like we're in this cycle now. Just when we think we're going to start seeing a little bit of upward momentum, we get slammed down again.
Yeah, we had, a nice gain yesterday, but it just it turns around, basically, one day and then it reverses lower again. And that's what we had. The market came off lows on word that the Senate was going to pass a phase two coronavirus bill. This is not the big trillion-dollar plus stimulus that people are talking about, but it does include paid leave and certain benefits in the meantime. But that was sort of expected. But, it's like really punishing losses. I mean, really, even for a bear market, this has been pretty much straight down.
Yeah, it has. But let's take a look at some stocks that are on our radar. We know that a lot of people are working from home this week and, using applications like Zoom as we are right now. Also, Citrix Systems seeing a bit of a benefit here. Ticker there is CTXS. And so we're going to take a look at a daily chart for Citrix, staging a breakout today. It did come off of its intraday highs, but what do you make of a lot of these stocks that we are seeing that weren't really on our radar until now the coronavirus is hitting, whether it's, canned goods or software makers?
Yeah, I mean, this one makes a digital, platform, so you have all the tools you need to work pretty much anywhere, and obviously that's useful right now. This has been at times a good stock. Its growth has been sort of sluggish in the past couple of years, and not so great this year. But the relative strength line is soaring. I mean, for goodness sakes, any stock that's even close to its high is going to have a soaring relative strength line. Yeah, technically, it's right around a buy point, but you don't want to have anything to do with buying stocks in this situation. Uh, but you want to look at stocks that are holding up reasonably well because they may be the big leaders in, when we do have an eventual rally. But we don't have anything like that right now.
Yeah, that's right. So one for the watch list, but again, reiterating, not looking to buy stocks right now. Cash is really the best place to be at this point. But now we're going to take a look at Apple, and it is trying to hold its 200-day line. Looks like it fell below that level today, tacking on a loss of about 2.5% today, Ed.
Yeah, I mean, Apple is one of these stocks that you might call, the best losers or absolute losers. The relative strength line has hit a new high, but with a few exceptions like Citrix or Zoom or a few stocks like that, these stocks are still falling a lot. I mean, the market has fallen so much that even when a stock like this tumbles below its 200-day and is struggling to get above that, the RS line continues to rise. I mean, so you definitely want to watch Apple when this market turns around. Maybe this is one that has another big run, but right now you can, you're relative winner, but it would be an absolute loser, and you just don't want to be in that situation.
Yeah, that's right. And Tesla also looking like it's in the loser category itself after that meteoric run not too long ago. And Tesla seemingly, what, Ed, ignoring orders in the Bay Area for that shelter in place?
Yeah, it's pretty amazing. Alameda and a lot of these other Bay Area counties and San Francisco said stay in place. Only essential businesses can stay open. Last night, the sheriff for Alameda County said no, Tesla is not an essential business, and only limited operations like payroll can go on. But apparently, they're still operating. I mean, it's sort of amazing. I mean, honestly, in the middle of a pandemic, that it's just sort of ignoring it. But from a stock perspective, I mean, this has been tumbling for several weeks now. Even when the market has had good days, it's been falling lately. It tumbled through the 420 level, which is clearly psychological, is that funding secured level. It even round tripped the 361.30 buy point that it cleared in December. So it's completely round tripped out, went below the 200-day. who knows how everything will go. The big three automakers shut down today. There's not going to be any demand for any autos for a while, it seems like, around the world. But right now, the stock is really falling apart.
Yeah, I mean, there's a reason why we have these sell rules, why you should be locking in profits. There's a reason why we pay attention to the market's direction. And this goes to show you, because even if you did buy it right here, it has now round tripped all of those gains. So holding and hoping, not as good of a strategy as these well-defined buy and sell rules that we have. All right, everyone. That is it for today's show. Thank you so much for joining us. And of course, the conversation will continue tomorrow morning on IBD Live. So make sure you check that out. You can go to investors.com/IBD Live for all the details. And you can also follow us across social media. We are here to answer your questions. So feel free to reach out. All right. Until tomorrow, it's Alyssa Corum and Ed Carson. We'll see you next time.